I want to talk about a bunch of setups that we're seeing in the market because there's a plethora of them. But before I do that, let's do a quick recap of how last week went, because last week was a bunch of news. We had Powell come out, the interest rate decision, tons of the big tech earnings. The big takeaways here, and even what has caused some banks to change their forward-looking guidance, is that Powell said the potential of a rate cut in March is down precipitously. And we also think that cuts won't come until June. The economy has managed to continue to be strong, mostly being carried by continued wage inflation. People are making good money. Jobs reports have continued to be strong, and inflation is kind of teetering right now. Looks like it could develop structural, but we haven't seen that come out yet. Much like I was expecting, as I've talked about in the past, I think the Fed is trying to be cautious, trying not to have that inflation return. However, due to everything that's going on, the market does look bullish right now. I'm still betting on a period of volatility, and we've seen even as the market has been buying dips and rallying back up, volatility has remained consistently high, and I think that mid-February we could run into some of that volatility. We could have the potential of a sharp drawback in the market where volatility will print and those calls will pay out. However, I think this next week you have a period of relief, you have a green signal, you have a Goldilocks environment, and on top of that, I'm getting more and more bullish about how the rest of this year could play out. I mean, it looks like all the setups are there, and we're going to talk about that on this weekly report. Now, the number one thing you be watching right now is the news that's been happening over the weekend with U.S. retaliating against Iran. Now, we could probably talk about this for a full half hour. I have a lot of opinions, but to boil it down simply, it looks like cooler heads are prevailing. It seems like this won't develop into a larger conflict or a full-blown war, and that is good. If it does, though, be careful. This has some potential of World War III. I know some people are going to think that's more controversial than others. I would just say do not let it fall off your radar. Keep an eye on it. And right now, I'm not too worried yet. Now, let's kick off with some bear cases. Right now, Apple has been holding 180, which is very critical. I think if this breaks, look for the mid-70s, maybe even potential touch at 170. I wouldn't look for this to go much lower at 160. On the most extreme bear case. And actually, I'm pretty bullish on Apple at these levels. I like it. I'm going to like it more if we see a sell-off. I think the big thing you got to watch is if I invert this chart right here, we very clearly see a cup and handle playing out. So this thing, I mean, if this was the chart, I think most people will be saying that they are bullish, which is actually bearish because that's the inverted chart, right? So I'm looking at this as like a warning sign. Look for a break above 190, probably 192 here, and then I would be bullish again. Just be cautious of Apple. It has the potential to bring the market down, although we've seen so far that hasn't been the case. There's also been some very bearish reports, people trying to chase the headlines that we saw from Bank of America. Fat Baby Funds, who's fairly popular on X, put out a short report claiming that there's misleading marketing. You know, this is the same marketing that all the energy drink companies use and the supplement companies use. As someone who has majored in biochemistry and biotechnology, I followed the supplement industry very extensively for many years, even longer than I've been trading. Nothing here is new. This is like common practice within the industry to claim that there's thermogenic properties from anything that contains caffeine, or to use even caffeine analogs and then rename them with their scientific names so people can't follow it, and then say that it's a weight loss supplement. This is nothing new. And honestly, as far as the supplement industry goes, maybe I'm jaded, but I've seen so much worse. I mean, just egregiously worse. Even most things that sit on the shelves today are nowhere near as bad as Celsius, who's just kind of following a typical marketing strategy that you would see within the industry. On top of that, I'm just going to follow the chart on this one. It looks strong. The catalysts are still in play. International growth. We saw some skepticism in that short report about the international growth, but to be frank, I just didn't find it that convincing. You can be mad at the tactics that the industry uses for their marketing. I have been for quite some time, but they do it because it works. Now, the one thing that will cause me to drop some of my allocation, not flip my stance, but drop some of my allocation and become a little bit worried is some of the accounting issues that are also quoted in this. The one thing that does kind of concern me is that this was put together by ChatGPT, which is prone to just completely hallucinate. So I hope the writer of this fact checked it. I did some fact checking. I stopped though because one of our great analyst at Nobel Trading is doing a deeper dive. So make sure you check out the link down below. Check out the Peach Pit. He's going to fact check all this while I hunt all the other names we're about to talk about. And we got a lot of interesting earnings that come out this week. Symbiotics, one that I already have a play in. I am long on this stock. Our options right now are up 65%, looking to take a lot of those profits into earnings. Likely play it as a lotto into earnings, maybe roll up my strike a bit, get further out the money. Palantir has been looking very strong recently. We've seen some really good reports out of there as well. Looking for them to get further developed into retail because I don't like that they're mainly in government. Chegg is one that I've been short on for a long time. I mean, this stock is headed towards the dogs. It's no surprise to see this get crushed the way it is. Kids that are in college right now are not using Chegg. They're going to be using AI instead. And, you know, physical books isn't even a big portion of the revenue, but I imagine that that is also going to get crushed as well, as most people are just buying the electronic versions. I think Snapchat could have some issues with earnings. It'll be interesting to see how this one plays out. I have been surprised at how many people are paying for the Snapchat premium though. So, I mean, I'm kind of 50-50 on this. Don't really have an expectation. Maybe you could play something like a Strangle into that. Spotify's really going to be interesting as well. We've seen that there was actually a major news story where Spotify is basically being forced to rehire these people because it didn't consult with the Works Council. Honestly, I'm not familiar with some of these European laws. We see that Germany's actually adopted doing this. It's not just in the Netherlands as well, which is probably going to decentivize a lot of these big corporations to not even operate within these countries. I think it's going to long-term hurt them incredibly bad. Some people are, you know, like George Gergely. What is this name? He's happy about this. I think he's just short-sighted. So the stock could have a reaction in the short term. However, just overall, we are incredibly bullish here. I'm looking for more upside. We're getting low on time here, so I'm just going to rattle off the rest of these. I am bullish on LLY. I think it's interesting. ELF, I'm bullish on as well. ARM, I'm bearish on. Uber, I'm bearish on. PayPal, I'm bearish on. Walt Disney, I'm bullish on. Pinterest, I'm iffy on Pinterest. I thought Pinterest had a good setup on the longer time frame. It looks bullish, but we saw Google miss on revenue, then Meta beat on revenue, but Meta beat on revenue because of all the Chinese spending. I don't think you're going to see that same dynamic exist on Pinterest. Maybe I'm wrong there, and maybe they beat. I'm just not as certain as I was before on that. That was a profitable play, although it was a bumpy ride. So, I mean, you could play it if you want. And let me be clear, I'm bearish on ARM simply because of its evaluation. I think we could see something similar to AMD. This company probably will have higher highs in the future, but just in the short term, I'm bearish. Another stock that I'm still bearish on, and some people have been arguing with me about this, that Tesla has clearly defended the 182 and is now looking very strong. I think we've seen some of this before where we've still dropped to lower lows for this stock, defend, plummet down. I'm looking for the plummet down for this stock. I also think that the news that we got from Elon was really bearish, and we've seen him, instead of when he doesn't get his pay package for Tesla, I think it's huge. We're also seeing lots of news about hydrogen vehicles with BMW also coming out. I think this could cause some fear when it comes to Tesla. I think we're going to see some short-term downside, at which point I'm going to be just crazy bullish on this stock. But right now, I'm still bearish, and I think if you break below that 182, you're going to see a fat candle to the downside, a very quick trade on the plummet. Now, let's push back out to our 50,000-foot view, okay? Because the Magnificent Seven is holding up the market right now. But if we look at the small caps, I was talking about this in the past, the TTM firing on the monthly chart, and this consistent pullback and then pump, pullback and then pump, pullback, and we're starting to see on the monthly what looks to be a green candle developing, and we could be seeing the pump. If the pump comes and IWM can then break above this consolidation phase on the weekly chart, this entire market for the rest of the year gets insanely bullish. I mean, 2020 levels of bullish. I know there's all this risk and all these things to worry about, but there could be a ton of upside risk building. Now remember, this is a monthly chart. Now we're looking at a weekly chart. This is take another month, a month and a half to play out. It's not going to cause me to get out of my VIX calls yet, because those are very short term that we're looking for some movement, mid-February, March on those. But keep this in mind that this market could become insanely bullish, and it could melt up with bonds. When I look at bonds right now, these long-term treasury bonds, I'm also finally feeling bullish again. I had a small position in calls. I'm looking now to average into those for later into the year. I know that we're not going to see some cuts likely until June is what most people are saying. Maybe it gets pushed out further than that, but I don't need that. All I needed was the confirmation that the Fed is done hiking, and this is going to make me bullish on bonds. So you could be setting up for the rest of the year an environment where stocks and bonds and everything just goes up. Maybe crypto goes up with it, and everyone just goes into frenzy mode. Suddenly, your server at the restaurant's giving you stock advice. Your Uber driver's talking about stocks again. It's now the cool thing to do once again before we see the probably doomsday in 2025 that precedes. And if you want to know more about that, join the Discord. We talked about it, doing some very 3-decade long charting on the NASDAQ. It does not look pretty. So if you're a bear, you got something to look forward to there. But I am excited about this year. I think it's going to shape up to be a big money making year. I see opportunities everywhere. And this is just a fraction of the stuff that I'm going to be talking about in the Discord tonight. By the way, we'll be doing some live trading on the future. So if you want to join in on that and you want to make some money and learn about day trading and investing, make sure you check out the links down below. I'll talk to you there.